Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy. I would like to address a special event announcement that we have. I'm very honored to have with us on June 25th, Rick Rule. Rick Rule himself, president of Sprott Asset Management. Will be here in the room live to share with us his basically his knowledge, wisdom, and expertise in the precious metals markets, natural resources, and basically the world economy in general in terms of where we're going. I think these are very critical times, and I thought that bringing Rick into the room can give us a perspective from somebody that's been around for quite some time and has gone through the different cycles in this markets, and I think he agrees that what we're looking at is one that's going to be basically be one for the history books. And so we're going to focus on June 25th at 10 a.m. Pacific Standard Time. That's 1 p.m. Eastern Time. June 25th, 10 a.m. I'll see you there. Moving right along, what I would like to do is focus first of all on the report that we just published here on Saturday, the weekly report. I want to get right into it because we seem to be getting some very strong confirmations of some of this intermediate to long-term signals that we've been anticipating, and we've been basically recommending our subscribers here in the room and anybody that's been listening to us that we've been looking for a completion of this corrective pattern that we've been in since January to be finished and completed by possibly anywhere from June the 18th to the end of the month. These are major long-term cycles that are coming together harmonically, making a historic alignment during this point in time. These were the very same cycles that we saw when the price of gold was at $1,900 or higher, and it basically brought in a cycle that lasted more than 3 years, going on 4 years, which is basically overextended. The second half of the cycle here. Bear with me 1 second. I'm having a little bit of an issue here with the website here. Hang on 1 second. The cycle that we are referring to topped out basically around September the 7th of 2011 at around 1900. And so the area that we're looking at right now between the end of June, the beginning of July, seems to coincide actually with an overextended cycle that is long overdue for a completion of this correction. And what we're trying to find here in the work that we're doing here in the algorithm is to identify the synergy in the market using the daily algorithms that we publish in the website, and harmonically combining them with the weekly reports that we publish, as well as the monthly reports that we use to find and identify the harmonic timing, so that in Hello everybody, this is Patrick MontesDeOca here with the Equity Management Academy. I want to welcome you to the room once again, and let's go right into the gold market here. We're looking at a chart here in the gold market that basically is covering the August gold, and we're looking at 15-minute bar. Let me address something here. I want to put the daily bar. We're looking at silver on the top right here, and we're looking at the gold market here on this chart that I have here in the room. And I want to take a look at the daily prices here in using some of the technical components basically that we use to identify this this market, in particular the gold and the silver market. What you see here is the daily chart in the the lines that you see here are representative of the algorithms that we use on a daily basis. And what I want to do is I want to take a look at the weekly VC indicator that was published on the 19th, on Saturday, and what it was forecasting as we come into this week. Excuse me. You receive an email that allows you to have access basically to the master report, which is this here, which is the weekly VC price momentum indicator that we're using. And here I give you very specific levels where to exit your shorts and exit your longs. We use the moving averages as one of the component indicators to identify the trend momentum. So the June gold contract closed on Friday at 1200, and the market closing above the 9-day moving average basically of 1191 is confirmation that the weekly trend momentum is bullish now. But it also tells you that if we close below the 9-day moving average, it would negate this bullish trend to neutral. So it gives you an alternate count right away in terms of the price, what the price needs to do to negate the move. The second component is the momentum indicator, with the market closing above the VC weekly momentum indicator of 1193 now. This is the weekly indicator for the week. It confirms that the price momentum is bullish. So a close below the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. So here was the close on Friday, and this pretty much was the level, you might say, that we were looking at. The a daily VC code that you see of 1200 and 1193 is the weekly, and it appears that obviously we have broken way below that into where we are right now, which is 1183.70, down $18 for gold. And the report further, in terms of the price indicator, told you that if the market does come down below 1193, that look to take profits on those shorts into corrections at the buy 1-2 levels of 1179, buy 1 level, and 1159, the B2 level. And so if you look at the price on the left, it's come down to a low of 1181, 1181.60 as of today, very close to triggering the weekly buy one level of 1179, and basically activating a buy along at 1179. So it's preparing you and showing you where the entry points are identified right away for this week. And today, Monday, we saw this big bar here follow through the weekly VC breaking under 1193, and pretty much coming down, as I said, very close to the buy one level here. So the gold market is basically waiting for a trigger of 1179 or 1180 in that vicinity as a buy one area, looking to buy long. And so you want to be looking out or have an order to buy gold at 1179 or better for the rest of the week. The day trade signals that you see here posted in the room are published basically the night before. They're sent to our subscribers, and you get access to these algorithms for the following day. And then when we come into the room here, we basically post the algorithm, and so you are prepared, at least in terms of prices, what to expect for day trading. And we based on the day trading algorithms, we give you very specific levels that you simply allow for the price action in the room to trigger these levels. For example, the silver market came in with a VC code 1604. You can see it right here. And basically the logic that we teach you is that if you come into the room, or when you start to trade, you're neutral. The price closing at 1605, it was above the VC code, so a close above it, would be bullish. And here it triggered a couple of times, basically. From 1130, it gave you the opportunity that you can trade against this code on the long side and use it as a stop if it closes below. And here, basically, it came back down. It tested this code again at about 6 a.m. and then it just took off and went right into the target of sale one. When the signal is activated, it activates the stop level below, or the level below as your stop, and the level above as your target. And it tells you right here, 1604, a close above is a buy, sell one at 1620. So you have your trading range and bracketed in price already. You have your stop, your entry point, and obviously the closer that you buy into this code, the lower the risk. So market made the first trade, it came back down. When you exit a trade, you go back to neutral. You wait, the signal closed below the code. Told you, sell if you want to go short. The target automatically is the code below, and it came right into this code and met the second trade target, and it traded basically. This is a new setup. On this bar, it activated another buy signal, and it gave you the opportunity to, like us, for the day, take out $300 in a matter of basically just a couple of minutes. And what we do here is basically very transparent, and even though we're teaching people, subscribers that are interested in learning the methodology that we follow, we are very transparent in providing you with the algorithm the day before. We prepare you, as I said, the day before. We update it in the room. We post it in the room. We show you basically everything before we do it, and then we execute it in the room. And once the trade is executed, and then we are able to show you that with time and sales. We entered the silver trade at 718, at 1607, 718.51. We bought one at 1607. At 721.28, we sold one July silver at 1613 for a $300 profit. So this is the actual statement of the trade, and you can verify this, you know, in getting your own time and sales. So we are preparing you. We're giving you very specific intelligence for the following trading day, trading session that you can execute. And we teach you the methodology of how to activate the signals. And once you are able to understand the dynamics of what triggers the signal and activates the signal, obviously, as a subscriber, then you begin to empower yourself with an incredible trading tool that you can trade literally 23 hours a day. Now, the market in silver, if we take a look for a second at the silver market, and let's see what the silver market was telling us. The July silver futures contract closed at 1605. The market closing below the 9-day moving average at 1641 is confirmation that the weekly trend momentum is still a little bit bearish. But it tells you closing above 1641 would actually negate the weekly bearish short-term trend to neutral, and they begin to turn bullish here. This is the 9-day moving average, and we watch that to identify the trend momentum. With the market closing below now the VC weekly price momentum indicator of 1610, closing at 1605, it's a little bit bearish. But it also tells you always that if it closes above 1610, this is the key for silver today. It's trading at 1616. If it closes above 1610, it would negate this bearish signal to neutral. So you're on the alert. I'm already preparing you for a close above 1610 in silver is going to activate the bearish trend to neutral. Here, we told you that if you're short, look to take profits if we come down to 1576 to 1578. And let's take a look at the daily chart. And we can see here that the low that was made was 1598.50. So we haven't quite come down to this level B1 support on the bearish, basically the bearish signal. And we're trading now above 1610, which is the pivot point for the week, which is very bullish. So the market did not have the muscle to come down to test the 1576, but it has the strength to come back up above the 1610 pivot point. And if we close above 1610, it's going to negate the bearish signal to neutral. And a second close above 1610 would activate the buy signal on the weekly report. So I am preparing you now for this week that if silver closes 2 times, you want confirmation conservatively, 1610 or above, it's going to negate the bearish trend to neutral. So I'm already preparing on the weekly. The daily told us that 1588 to 1572 is the buy 1, buy 2 area. That's pretty close to the weekly. That's pretty close. And obviously, the low today that we've seen in silver once again is 1598.50. So you can see the weekly prices aligning harmonically with the weekly prices at these levels. The daily 1588, 1572, the weekly 1576 to 1548. The algorithm has just identified with you the highest probability for you to enter a long trade on the long side, or a buy position in silver and in the gold market. What really is important that you also see is that when we trade in the room, which are real live signals that we execute with time and sales, we are not brokers, we are not money managers, we don't charge a percentage of the profits, and so what we show here is the execution of the live signals that we are doing here in the room, which you can follow and duplicate, because we make it very transparent for you to be able to do this in your own account, which is really what is important. Not what I am doing here, or this fantastic track record that seems to be building, but that you take the intelligence that we teach you, the methodology that we teach you, and that you produce year to date 117%. We're up 16% for the month of June. May, 12%. June is not over yet. April, 19%. And you can look at all these numbers here. We're running the swing trade signals that we reviewed here at 93% profitable trades. The day trading signals are running 63-64%. You want to see the signals themselves, you can click on the tab Swing Trading, and you can see the equity curve, completely transparent. This is not back tested, this is not theoretical. These are live trading signals executed here in the room. And if you were to be following us, there's no reason why you should not be accomplishing the same results. It's that simple. I'm very transparent. I do it in the room, and we post all the trades here. You can look at all the trades that we've done monthly. We run 3 or 4 months in a row profitable. January up 14,880. By the way, we do take losses, but what you see here is also the ability of the system to come back right away after a loss is taken. And that's the integrity of the program, that it has the ability and the resilience to come back right away, which is what you want to see in a good program. And out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, 2 are wrong. Month of February, all profitable trades, 22,600, 3, 6, 9 trades profitable. March, 1, 2, 3, 4, 5, 6, 7, 8, 9 trades profitable, 6,620. April, 1, 2, 3, 4, 5, 6, 7, 8, 9 trades profitable, almost 7,000. In May, you can see it. This is real. You can verify it. We show you if the entry price. We are basically we have documented the trades so that we have time and sales on every trade that we do, and so that what is important is that if you follow 90% of what I am doing in the room, you should be able to accomplish these tremendous results. And the way that we're managing risk basically is that we are day trading in the room, and we are using instruments, derivatives of the metals markets, like ETFs, for example, for us to manage the risk overnight. And before I leave you, I just want to take a look at a couple of ETFs that we're watching here very, very closely, and you see it here at the bottom of the chart. One is JNUG, which is a gold mining share. The chart on the right is Nugget, and the price levels that basically we're looking at for these instruments are just incredible levels that I believe it is my responsibility that if you haven't seen this type of instrument and potential, that I bring it to your attention. And that's what I'm doing in the room. I do it for myself. I do it so that subscribers can have the edge in terms of this particular sector that seems to be building tremendous pressure for prices to move to the upside. So here is the algorithm for JNUG that gives you very specific information about the ETF itself. And these are the basically algorithms that you see here posted in the room. The ones that you see on the left are dailies, and the dailies basically are into that blue level or buy one or buy two level that indicates that you should be accumulating. Now, this tells you basically the same direction of the algorithm. It gives you the moving average of 22.17. Market closing at 22.29 is bullish for the week, but it also tells you closing below, it negates the bullish, and prices can come down to the lower end of the band, which is 1995 to 1761. And this tells you that if you're short, you need to cover your positions here and go long. And so what we do is we wait for the highest probability entry points and signals, which is in the blue zone for buying, in the red zone for selling. The VC code is the weekly pivot point that tells us basically it's the metrics, the middle metrics for the week. And when the price reaches the extremes of sell 1, sell 2, it's an extreme to the mean. And when the prices basically come down into the buy 1, buy 2 level, ideally below B2, it is extremely oversold to the mean. And so what we expect is a reversion to the mean. And in the weekly, it's the pivot point, 2167. The daily is basically 2228. And we are finding that there's a real close synergy between these instruments. If you want to just get an idea, what I like to do is click on the name JNUG, and this will take you to a website that we published our information, investing.com, and they give you quite a bit of charts, anything at all with regards to market analysis information, and you can use this freely to find the different prices or analysis that you may want to do. Here we took a look at JNUG. Let's take a look at JNUG. Just on January of this year, we were trading at about 45. And so from where we are right now, which is in the 2138 area approximately, just going above to the January highs, you're looking at a 100% return on your money. It's 21 per share at 45. That's more than 100%. This is only at the January highs. And so what was the price of gold in January? We're looking at about 1300. So we're at 1182, 1183. So we're looking at a $113 move in gold from where we are, which is about a 10% move. A little over 10%, I would say, will put the price of JNUG at 40 based on these numbers. Now, is it going to be exactly a 40? It depends on the volatility. But it's very realistic to say that buying these assets here, which I believe are at record lows, and I think we've seen already the lows here that you see at around 1461 for JNUG. I believe that we have not only a chance to go up to 40, but possibly to go up to at least the 300 area, 300 an ounce, which was the high that we made in October of 2013. And you're looking at the price of gold back in August of 2014 just being around 1338. And so what I am making subscribers aware, my audience aware, first of all, is that these are high risk ETFs. They're XXX velocities. They're very, very volatile. You have to measure your account and tolerance for risk if this is something that you may want to do. But I'm finding these instruments to be excellent instruments for volatility. If you're a trader, a futures trader, you're trading volatility, this is a great way of managing the volatility of a futures contract away into a $1 per share instrument that you can buy and hold. And you can, obviously, if you see the results that we're getting on the futures, obviously you can see here percentage-wise, what you can do if you buy these derivatives that are paying you 3 times the velocity of the underlying instrument. In this case, obviously, it's the gold mining shares. GDXY is the underlying ETF for this JNUG. They have available bull ETFs that you can buy as the price goes up and the market goes up, and also bear ETFs that you can buy for the price to go up as the market comes down, very much like a put. So you can trade both sides of the market. It gives you a tremendous flexibility for you to be able to manage your risk away from what is treacherous, risk, which is in the futures market, particularly if you hold the contract overnight. So for any additional information that you so desire, please feel free to contact us at 805 area code 418-1744, or you can email us at support@ema2trade.com. That is support@ema2trade.com. I want to thank you once again for the opportunity to share this information with you, and I look forward to seeing you next time. And until then, have a great trading week. I'll talk to you soon.